welcome everybody to the International Investment Iberian Spotlight. This is a panel Q&A session today with some sponsors and some fund selectors and financial advisors. This is part of an easy magazine that's going out that is focusing the spotlight on the Iberian region. But today we're just going to talk about some funds, some matters of the day. And first off, I'd like to introduce the panel. So we have Oren Kaplan. He's the co-founder of SharingAlpha. SharingAlpha is the world's largest fund selector database. So welcome, Oren.
Hi there.
We have Araceli De Frutos.
Perfect.
That's not bad, is it? Is that okay?
Perfect.
Thank you very much. Financial advisor based in Madrid. We also have Lidia Treiber, who's Director of Research at WisdomTree. We're very pleased to have Lidia on board. Welcome, Lidia.
Thank you.
A general question for the panel. If we all keep the answers to around about a minute, minute and a half at the most. This is a hot potato question. You must have been asked it before and thought about it. How has the global pandemic changed how you work? How has it altered how you work? First off, Lidia, please.
Oh, thank you. So I think the way that the firm has kind of adapted to the pandemic is really quickly provided the work from home resources for all of us. So now we've been remote first for well over a year and a half, and it's really worked quite well for us, and we've been very efficient. We've launched a few products, and so it's been a great experience and a very challenging one in many ways, and I'm sure other panelists have similar experiences, but we're adapting. I'm adapting, and as you can see, I'm working from home today, and I think that provides also flexibility to myself and really to everyone. So it's been an adaptable period, if I say.
Araceli, how has it worked for you? How have you been able to see clients, and have you found that the pandemic has altered your working practices for the good as well as for the bad?
Mm-hmm. Well, first of all, I have to say that I used to work from home before the pandemic. So in that sense, I have not noticed a big difference in that terms about my workplace. But I just say I noticed a big difference in terms of the relationship with my clients. So on one hand, as face-to-face communications through the meeting disappeared, I had to increase my digital presence in social media and in social networks to reach potential clients for one hand. And on the other hand, the professional meetings or events that you have face-to-face too, I miss out. So we have to adapt to the digital process, like for example now that we have a digital meeting. And I think the pandemic had made a big or a huge progress in that sense, in the digital presence in all sectors, not only the financial sector, but I think in the financial sector I have a huge presence in digital presence, and it's very useful for our clients and for us too. Because now you can reach in a different part of the world, not only in Spain, but different part of the world for new clients too. So in that sense, I think you have to see the positive part of that pandemic, And the positive part, I think, is the relationship with the clients are more fluent now with the digital presence.
Good answer. Thank you for that. Oren, you're based in Israel, and you have fund selectors all over the world. So is this, has the pandemic altered how you work? You're getting on less planes? How's things gone for you?
Well, I haven't seen a plane from the inside for, a year and a half now, which is a big change for me. I used to fly quite often, so I think that's quite positive. There's a lot of things I can do now remotely, and I see that as a huge change in people's mindset. So previously, if I needed to talk about SharingAlpha, I needed to take a plane, basically, because from Israel, taking a car anywhere doesn't really result in any positive outcome. So less mileage on planes is obviously something that I benefit from, and I think that's here to stay. SharingAlpha is a digital platform. So for us, this whole move that was enforced on people is actually very, very positive for the business itself. There's a shift towards using digital research tools and finding new leads. The fund providers are, looking for new ideas, new tools to get in touch with prospects, and that's exactly what we offer. So for us, it's been a very positive thing, actually. So the only positive thing I can say about this pandemic is that it really boosted our business.
Let's move on. Lidia, just we've spoken about this before, but can I ask you a question about the European bond market? You're our expert in the area. What are the key drivers informing investment decisions in the European bond market? Tell me a little bit about that.
It's an interesting question, and I get that all the time now, especially because bond yields right now, especially in the European market, are very low. So there is really, I would narrow it down to really three key drivers that are driving investment decisions in the bond world at the moment. Number one, there's this continued search for income. It's been there for quite some time, but it's a little bit more pronounced now because yields have really come down considerably since last year, where markets were very nervous. Obviously having a global health pandemic is something quite unprecedented, and it really drove bond yields to quite elevated levels. So investors really, were quite nervous, and that was being priced into bond markets. Today, we still see a lot of uncertainty, but investors have become much more comfortable with risk. So there's a continued search for income at the moment, and there's that relative value. What parts of the bond market are offering that yield? Secondly, it's really about the fundamental strength of issuers, because clearly, there's still a lot of uncertainty. We're coming up with, recently there was, a lot of news and volatility in the market because of the energy supply shocks. There's been, news surfacing around Chinese property market, potentially having some hurdles there, and this could trickle into global bond markets. Now, all of this means that when investors are looking to invest, they want to buy companies, or they want to have allocations in bonds that have, very strong fundamentals so that they can weather this volatility. And I think the third component that's really driving investment decisions is really about looking at the entire portfolio and adding assets that provide that portfolio diversification. Because right now, I think especially in the Spanish market, there's a heavy allocation to equities because equities have done so well and bond yields are very low. So by adding, allocations to, different asset classes that provide diversification, such as AT1 COCOs or emerging markets, et cetera, that are providing that yield, but add diversification, investors are able to, kind of diversify a lot of the returns in their portfolio and create more defensive, more resilient portfolios in periods where we could see some additional volatility towards the end of the year.
Thank you, Lidia. Just same question to Araceli. What are the key drivers informing your investment decisions when looking in the European bond market? What do you look for?
Yeah, I think mainly nowadays the bond market, as well as the stock markets, it's highly influenced by the monetary policy decision of central markets. I think the liquidity that the central bankers are giving to the market is the main supporting for the credit market, for the bond market. So it's very important nowadays how the central bankers are going to withdraw the monthly portions. I think nowadays, more from my point of view, are more risky in fixed income than in equity markets. So I nearly don't have recommended recommendation in bond markets for my clients' portfolio, and I think as I say, the withdrawal, the monthly portions of the central markets are very important for sustain the bond markets. But I think it's very important too how the recovery of the economy are going to develop. I think the opening of the economies could help the credit markets as the increase of the appealing to that financial asset. As the clients look for or reach for the yields, so that recover could help the yields up, and could have an opportunity to include the bond market and the credit markets in our portfolio clients.
Thank you very much. Good answer. Oren, I'll move on to the next question, and I'll bring you in for your view at the end of that. But I just want to ask Lidia about, using your expertise, about the pockets of the market that still offer yield for bond investors. Where can you look for yield, and where might that be?
So that's a question that's quite interesting. I think, if we look at where yields and spreads are, the spread between the high yield bond market and the investment grade bond market is at a multi-year low. So what that means is that there's a lot of investors that are just not getting, obviously, that additional compensation for putting on risk. And so sometimes, and historically, when we're in a period where we are today, where we're seeing bond yields rise, a lot of investors kind of delve into the high yield bond market. And I think the clear point with the high yield bond market is that not every issuer is equally as strong. Obviously you're getting more yield because these are weaker companies, and there's pockets of the market that are more associated with picking up yield because you're going towards the subordination of the issuer's debt, such as AT1 CoCos. So these are issued generally by European banks, and as we know, generally these large systemically important banks, have an investment grade credit rating. But investors are picking up the yield because they're going down in the bank's capital structure, where obviously there's a lot of additional risk associated with the features in the subordinated debt. And investors have said, well, there's an interesting balance here, because amid this crisis, the banks have had a lot of support by the governments. The regulators have supported them. We recently saw stress tests showing, a strong banking system, and they're picking up additional yield just by going, down in the bank's capital structure. So this is an interesting pocket of the market. I also think it's been driving a lot of interest because of that rising bond yield we're seeing. And if you look historically at how different bond asset classes have behaved in a period where yields are rising, it's been a difficult market for government bonds. It's been a difficult market for investment grade bonds. And historically, high yield, because it does offer that higher yield, higher coupons, it's performed better. But it's interesting when you compare it to 81 Cocos. 81 Cocos has actually even shown better outperformance historically during that rising yield period than even high yield. So I think, you know, this is an interesting area of the market where we are seeing a lot of investors, you know, take new allocations in the asset class, and especially in the Spanish market where they're comfortable with 81 Cocos, and they've been quite active even before the crisis. It is an interesting space that we'll probably continue to see a lot of demand for because of that pickup in yield and that, you know, profile of how it's performed in the rising bond yield environment.
Thank you, Lidia. Just looking at the same subject, Araceli, when you are looking for you know, for yield, what's your view on that with the, you know, within the market? Is there still yield on offer for the bond investors that you have?
Yeah. As I said, I think currently I see more risk in fixed income than in equity markets. I think the risk return offered by the fixed income is not so attractive for me. I think even high yield is a ridiculous returns, you know. But I have learned a lot from Lidia, because I think she's an expert and give me another view from the bond market. But I barely recommended fixed income in my portfolio's clients, and if I recommend it, always is with nowadays with low duration and in short term. So I'm very more in the portfolios more conservative. I have nearly 15% of funds investing in fixed income and in the with low duration and short term. So I'm not very fan of bond market nowadays. I'm more in equity markets nowadays.
Thank you. That's an interesting view, and this is what, you know, these panels are all about, to, you know, to get that alternative view and to you know, to highlight these areas. Oren, when it comes to your business is around the industry and the fund selectors. Do you have any views on the bond market and the European bond market? How is it looking within those SharingAlpha portfolios that the fund selectors are putting together? Have you noticed any trends?
Yeah, so instead of sharing my personal view, I'll share the view of the community. We have hundreds of professionals basically building up virtual portfolios on the platform. As you know, the incentive for them to do so is that we later rank them based on their performance. So they basically express their true opinion about the markets. They're not restricted in any way. So if they work for a German pension fund and their real day job, they're not allowed to allocate too much to equities. On the SharingAlpha virtual fund, the funds that they're building, they have no limits. So what we're seeing in the last two years, actually, since the crisis began, is a shift towards equities, a very strong shift towards equities. And that, as a result of that, if you look at the average allocation, the aggregated average allocation of our members, it outperformed any multi-asset fund out there, really, because of the high allocation to equities, which is still there. So our members as a whole are shying away from fixed income allocation. Their fixed income allocation is as low as 15 to 20% on average, which is way below what you find in the real world, if you like. So that's a very strong position and statement from our community.
Thanks, Oren. So within that, within that 15 to 20%, obviously, advisors, fund selectors, and investors will be looking for that yield. How important is ESG and green and social goals these days to how you invest and select funds. And I'll ask Araceli this question: how important is it with your with your investors?
But I believe that ESG, of course, is one more factor to take into account with the selecting funds, especially when it comes to being in companies with a good management team. For me, the corporate part of ESG for me is the more important. I think now ESG criteria is a fashionable point of view or a factor to take in account, but I think inherently it has been taken into account for years. Now I think you are showing that ESG is taking part of your portfolio on your selected funds, but I think it's a factor that nearly some years ago, I don't know how many years, but a lot of years ago, you are taking into account in order to select companies and to select funds.
Thank you. Just when it comes to Lidia, just looking at ESG, green and social goals, how does that impact in the areas that you operate, and how important are you finding that to have that connection within within your investment strategies and portfolios?
Sure. So just to put things into perspective, so at WisdomTree, we focus on exchange traded products. So really, at the product level and at the corporate and governance level, as a firm, we're very focused on the ESG, green and social goals, and really we've been very transparent with our investors and really focused on responsible investing, not only in the fixed income space where I'm very much focused on, but really across asset classes. And I think this is something that's very apparent in the markets since the pandemic, because I think what's happened is that investors have realized that their investment decisions could impact many facets of a lot of goals that countries and governments are trying to achieve. And so we as a firm offer a lot of different ESG strategies and tools for investors to take their views. So we do, for example, ESG screening in some of our ETFs, or we do thematic ESG investing. So it gives investors another way to kind of be able to invest in themes that they have a strong opinion towards. Or we also have responsible gold. This is something right now with concerns about inflation. There's been a lot of investors that have been allocating to gold, for example. And we want to be able to offer investors really the different tools for them to take their ESG views. So as a firm and on many levels, we have a strong belief in the ESG initiatives that are taking place within the investment community.
Thank you, Lidia. I've got a little ticking clock on my in my top sort of left-hand corner on the panel. We have a sort of time limit, so we've got about 8 minutes left. So I'm going to ask the question about Oren, just before we finish on that topic. I'm just interested in, from the SharingAlpha point of view, do you have any sort of numbers, and have you seen a trend towards the ESG green and green funds that are out there within these portfolios, or is it all about going for the just going for the alpha?
Yeah, so one of the parameters that the members are using in order to reach a rating for the fund, I mean, as you know, they're asked to rate the funds in terms of their future chances of generating alpha, and later we rank them based on their success rate of identifying those funds. one of the parameters that they're asked to rate is the ESG policy of the fund. And that's a very important factor for them, for many investors to look at when they look at the funds on SharingAlpha and conduct fund research, is to see which funds have been rated highly in that parameter, so that we're seeing interest in that, and that's why we've added it to the parameters. Yeah, there's definitely a strong trend towards looking at those factors besides the just looking at historical returns, looking and drilling into the policy of the fund, and to find out if it's genuine or if it's just in the headline, like we've seen from many managers going and saying, yeah, every decision we make is based on ESG and all kinds of statements like that. And when you look more deeply, you find out that it's not the case. So it's a challenging exercise to find out which fund managers are actually genuine about their ESG policy. And SharingAlpha offers a solution in the sense that it aggregates the opinion of hundreds of professionals in regards to different funds policy. So instead of asking a single fund selector to do that on behalf of their investors, they can look up the SharingAlpha database and see what their peers are, what their peers think about the different funds.
Thanks, Oren. The final question for the panel today is about the Iberian marketplace, and how does it differ to other European marketplaces? And I'll stay with you, Oren. We've got about a minute each on this. How does it differ to the other European markets?
So I can say, in terms of adopting new technology, I can say that the Iberian market is quite open to that. We're seeing, in terms of the proportion of members we have from Spain and Portugal, is much higher than you'd say from the total market or assets managed in Spain and Portugal. So we're seeing a very strong adoption towards SharingAlpha, or the digital platform that we're offering. So that's one insight that I can say about the Iberian professional fund buyers, I'd say.
Thank you. And Lidia, I'll ask you the same question. What observations do you have about how the Iberian marketplace differs to other European markets?
Sure. Well, I think the Spanish market historically has always been very heavy fixed income users. They've been a little bit slower to adopt fixed income ETFs, and that's really been kind of driven by this kind of favorable tax treatment towards mutual funds versus ETFs. But one of the things that we've seen over the past few years is this increasing adoption of fixed income ETFs in the Spanish marketplace. And what we're seeing specifically in the Spanish marketplace is that they've been heavy users of AT1 COCOs, for example, much more comfortable with the asset class than other European markets. And because of this low yield environment where we're in, and investors being much more heavily at the moment weighted towards equity, we're seeing the Spanish market showing a shift towards less traditional fixed income asset classes such as AT1 COCOs, an emerging market debt, for example, to kind of provide that income that the portfolio needs, even though yields are low. So it's a very interesting marketplace, and we have a lot of fun in the Spanish marketplace.
Fantastic. Of course, Araceli, you're in that marketplace, so maybe difficult to make a comparison. Do you have any thoughts? What makes the Iberian marketplace different to the rest of Europe, in your view?
Well, I think we can say Spain is different, but well, I think here on one hand, I think the client in Spain more conservative, I think, that in the other place, and we are the client is very focused on fixed income traditionally, and little by little are going to invest in stock market.